Dell has been on a complete run right now. Stock shot up 30% in a single day. Why? Because AI servers, not software, not chatbots, the actual physical machines that make AI work, right? That jump is one of the biggest jumps a company of this size have had in years. Their revenue hit $43.8 billion in one quarter. AI server business grew 757%. Massive, right? Also, the stock market, something's going on with it right now. And honestly, I think most people are missing the real story, especially retail investors. Today, I'm going to try to break some of these things down, share what's going on with the stock market right now for you, especially in this AI infrastructure realm, right? And try to explain what it means to you personally and your money. Before we get moving forward, my name's Curtis. If you have any questions, anything like that that you want to ask, I'll try my best to respond. If you drop it right into the comments, again, I will try my best to respond, right? Give me a like, subscribe for me, please. I truly appreciate that. Thanks so much for subscribing. And throughout all of my videos, this video too, I'm going to try to keep it straight talk, simple, straightforward, right? That's just my style. Easy to understand. Stay away from the jargon. Jargon. You know what that means, right? All right, so let's go ahead and move forward. All right, so let me share with you what I think the problem is with the stock market situation right now. Okay, you take a look on the left side of the screen, that big 40%. Okay, 40% of the S&P 500 is just 10 stocks. Your index fund is way more concentrated than you think, right? You think about how it's common to say that if you invest in the S&P 500 index fund, right, that you're well diversified. But when 40% is made up of just 10 stocks, I mean, how diversified do you truly feel, right? How palatable is that for you and your investments? I guess that's something for you to answer. Next up, we've got 82% of stocks are not at their highs. Most companies are actually losing. Whereas, truth be told, right? I mean, if you've been keeping up with the stock market, AIs, especially the infrastructure side, chip stocks, they're crushing it right now. That's where all the growth is at. On the far right, 30% target stock is down this year. Consumer stocks, retail, and industrials, they're all getting left behind, right? If you keep an eye out on the earnings reports, if you listen to the earnings calls and stuff like that, right? Walmart is a huge one. And Walmart, unfortunately, disappointed last week. So, some things to be mindful about when you're making your investment. Again, especially if you're a retail investor, it's my opinion that you should try your absolute best to stay up with up-to-date news on how these things are rolling through the economic and market cycles and stuff like that. That way, at least you get an idea of what's happening and if you're putting your money in one place, how's that being affected, right? And then of course that way you can look into other opportunity costs and see if you can move your investment somewhere else that's going to be again more palatable for you and what your goals are with your investments. So the big question is where should you be keeping your eye on, right? And ultimately, I had mentioned, right, the hardware infrastructure side is the place that's having where all the money's being poured into right now. I mean, it's, in my opinion, follow the hardware, not the hype. I mean, everybody's chasing AI. That's true. And AI is absolutely the future. I mean, there's no doubt in my mind that AI's already made such a huge impact on how we live our lives and how, the potential that it has to change it so drastically for our futures as well. My point is, I mean, there's real money in these machines, okay? $318 billion spent on AI hardware in 2025, okay? This year, they're saying it's going to be roughly about $700 billion from the hyperscalers, right? I mean, you're talking about the Googles, the Amazons, all those companies are pouring in money into AI because they don't want to be left behind. That's that's how incredible this is right now. And then if you take a look at the far right, $1 trillion projected by 2029. Okay, I mean, in a lot of different investment news that I've been keeping an eye on and listening to, right? It's their opinion that apparently, I mean, it's going to be more than $1 trillion being poured in already, but before 2029. So we'll see how that takes place. And if you think about all that money being invested, it's got to go somewhere, right? It's got to go into building AI, and that's all the hardware, right? That's the chips that are going into the data centers that once they're in the data center, in order for them to be able to operate, they've got to have these connecting cords from fiber optics, the optical interconnects. That's what they call them, the Ethernets from companies like Cisco or um, other companies that just make all these attachments that make AI work for us. So keep those things in mind. All right, so I started with Dell, right? Here it is. The headline on May 28th, Dell dropped their earnings and absolutely crushed it. Their stock skyrocketed, okay? Stock shot up over 30% in one day. And as I mentioned before, for big companies like Dell, I mean, that almost never happens. Take a look at these three things right here on the left, right? $43.8 billion in revenue. That's up 88% from last year. Massive. Wall Street expected about 35.4%, or I'm sorry, 35.4 billion. Okay. And then Dell beat that by more than $8 billion. The smartest analysts on Wall Street, I mean, it's fair to say they didn't even come close. You take a look at the second one, right in the middle, 775 or 757% AI server growth, right? That's almost 8 times more than the same time last year. That's the kind of growth for a huge company like this. I mean, you never see that stuff. Seriously. Third one on the right, profit growth of 256%. Their actual profit, the money that they keep after paying all their bills, jumped to $3.44 billion. Okay, that's not just revenue going up. They're actually pulling in this money. Before this, I mean, Dell's never grown by more than 39% in any quarter. I mean, ever since going public. They did that, and they did 88%, okay? It ain't hype. This is real money flowing into the hardware side. All right, so this is important to note, right? So why is Dell winning? Right? Let me keep it simple with 4 of these points right here, okay? Number 1, they build the AI server that everybody needs, okay? So for example, when Google wants to run AI, when Microsoft wants to train their models, when Amazon wants to power AWS, they've got to buy servers, and they're buying it from Dell. Okay, Dell is the go-to company for this kind of stuff. Then number 2, they are NVIDIA's biggest partner, right? Isn't that fantastic? NVIDIA is just crushing it, and now they're NVIDIA's biggest partner too. Where do you think all that money's going? They make the special chips called GPUs. That's what NVIDIA does. Okay, that's what AI needs to work. And Dell takes those chips, puts them into complete server systems that are ready to plug in and ready to be used. So you think about NVIDIA as the engine maker, and then Dell is kind of like the car builder. Okay, you throw the engine into the car. That's how they're being so insanely profitable right now. Number 3, they have over 5,000 real customers and $18.4 billion of backlog. Backlog means that it's sitting there waiting for them to make that money, okay? It's not speculative. People are waiting for them. These are real orders from real companies that are waiting to be filled. You're talking about, I mean, cloud providers, okay? Governments, large corporations, they all use this stuff. They're all in line waiting for it. And then we've got number 4 on the bottom, okay? Real profits, not just growing revenue, right? What that means is that they're not just selling for revenue, which is like the total amount that they make from the sales, but they're actually profiting from this stuff, right? They're actually taking home money. Their net income jumped 256%. That means that, Dell's not just selling more stuff, they're actually making more money on each one of their sales. And that's huge. They call that margins, right? So margins are improving because they're building custom, high value AI server systems instead of just the basic ones. The bottom line, I mean, in my opinion, it's my opinion that Dell found the perfect position, and that's why their stock has skyrocketed as of late. I mean, they're the bridge between NVIDIA's chips and companies that need to build their own AI stuff, and that's just an awesome place to be. Now, I want you to take a look at this chart here, right, from 2024 to 2026, because this is where it gets really exciting. Dell, their AI server revenue went from $1.5 billion in their fiscal year of 2024 to 9.8 billion. That's almost 10 billion in fiscal year of 2025, which is already a massive jump, okay? But then if you start looking more towards the right, okay, 2026, this is where they're headed. They're expected to hit $25 billion this year. And then what's even crazier is, and this is a huge reason to why their stock has jumped so massively, is because they're expected to hit $60 billion next year. That's 40 times in growth just in three years. And it's not just 40 times in growth. I mean, you're talking about going from 2 billion, 1.5 billion to 60 billion dollars. I mean, that's incredible. So for a company as big and established as Dell is, I mean, this kind of growth is almost unheard of, right? I've mentioned that. I mean, we're talking about a company that's been around for decades, and then all of a sudden, they're finding their a whole new rocket ship and exploding practically, exploding up into the air. So in a good way, of course. And Dell's not the only one. I mean, there's several other companies as well. Okay, legacy companies that are just they've pivoted over to AI and they're just making tons of money, being incredibly successful. And that's one reason why I say, in my opinion, you point to where AI is headed. I mean, it's doing a lot of real good. I mean, it's not just hype. Now take a look at these three boxes on the right, right? 40x growth in 3 years. That's a headline. Stock jumped up 150% this year. The S&P 500 is only up about 10%. Dell's practically outpacing the market by a massive, massive amount. And then, of course, the $60 billion target that I just brought up, I mean, they raised it from 50 billion just 3 months ago. What do you think that means? I mean, that means that their business is coming in faster than they had expected before. Who doesn't like that? So, at the end of the day, I mean, this is not a company guessing about the future, right? Everything that they've got set up, the orders, I mean, they're real. The backlog of people waiting for their stuff, it's real. I mean, they keep raising their own targets because the demand, I mean, everybody wants it from Dell. Now, Dell's not alone in this. The whole AI hardware chain, I mean, they're all winning, okay? Think of it like building a house. You're going to need different pieces, different parts, and different companies provide them, right? You take a look at the four cards across the top. Stage one on the left, right, is chips. NVIDIA controls 90% of the AI chip market, and they make the brains, practically. I mentioned that before. Dell is their biggest partner, okay? They're making tons of money right now. NVIDIA is the forefront of AI, and they're the face of AI. Then you take a look at stage two, right? We've got memory. Companies like Micron, they've been exploding. They've been crushing it lately. Companies like SanDisk, okay? AI needs that memory, okay? And to my understanding, it's kind of like this, right? If you go on to ChatGPT, for those of you who like to use ChatGPT, right? I'm more of a Claude and Grok, even Gemini, but whenever you use any of those, right? I mean, when they send data over to the AI to process, right? It's got to save that information somewhere, okay? That way it knows, it remembers what you guys were communicating about before. That's why these memory chips are so important to this. And uh, to my knowledge, I mean, something like, for example, NVIDIA's latest chip, okay, Vera Rubin. I mean, apparently it uses way more memory than it did in the earlier generations. So that's why these memory chip companies are making tons of money and skyrocketing as well. Anyways, prices are up over 30% because their demand is just insanely high. They're sold out as well, practically. Then we've got stage three, which are the servers. That's where Dell sits, okay? They take those memory chips, as I mentioned before, they build these complete AI server systems. They stuff the chips in there. It's kind of like putting the engine in a car, and their growth has been just crazy to say the least. 757% if you take a look in the middle of the screen. Uh, it's been a hot market for Dell, to say the least. Okay. And then if you take a look at the right, we've got stage four, which is the network side of the house. Okay, we've got like companies, legacy companies like Dell, but Cisco, they work with the networks, right? Everybody knows Cisco. They've been around forever. I mean, they're a leader in the industry for networking, but nonetheless, they're a legacy company, and that's how people thought of them. But now, I mean, they've exploded as well. Why? Because of AI, and they've repivoted their business to be able to support the AI needs. And how they support the AI need is they connect all of these servers together with, of course, I mean, when you think about networking, you think about Ethernet, you think about these fiber optic cords that, plug in from one thing to another. So that's what they do. But no matter what we do, right? I mean, there's always risks in everything. And if you're thinking about things pragmatically or competently, I mean, you've got to at least be aware of not just the upside, but of course the risk, the downsides, and everything that involves the business that you're trying to work on. So let me keep it real with you here, okay? And be straight with you on this. The first risk, 94% of big tech cash flow is now going to AI spending. Okay, 2 years ago, that was less than 50%. So, what that means is companies like Amazon, Google, Microsoft, Meta, okay, all these companies that we use on an everyday basis, okay, they're spending almost every dollar they make on AI infrastructure. Now, if AI doesn't deliver the profits that everybody's expecting, these companies are way overextended. Second risk, 40% of the entire stock market is just 10 stocks, right? That means, when you think about your 401k or maybe your IRA if you're invested in an index fund, that means that these funds are concentrated, whether you like it or not. I mean, because if you're investing in the S&P 500, I mean, it's an index, it's a group of companies that you're invested in, and if when it's made up majority of a few companies, that's not as diversified as you think it truly is. But again, right? I mean, it's whatever's palatable for you, and of course, if you're unaware of these type of things, it's my opinion that you should research and get to understand it a little bit better if it fits your goals of your retirement investments or your, just your regular wealth building investment. Whatever goal you might have, you should absolutely research into it. Get to know it a little bit. Then the third risk, okay, on the far right, 100%, right? The US could put tariffs up to 100% on foreign made chips. And here's the scary part. Almost all of the cutting edge AI chips are made by one company, right? I mean, you guessed it, Taiwan Semiconductors, TSMC. They've been all over the news. Why? Of course, because they make everybody's chips. They make Nvidia's chips. So if anything disrupts uh, Taiwan Semiconductors, right? I mean, it's, whether it's politics, you think about like, the oil issue out there in the Middle East right now, the Iran conflict, okay? Here in the United States, we just got a new Federal Reserve Chair, Kevin Warsh. He stepped in. Not sure what he's got planned, right? Rates, inflation, interest rates, inflation, things of that nature can all impact the artificial intelligence build out. And if TSMC is greatly impacted, it's gonna slow everything down. Because if you think about it, okay, TSMC, if they make Nvidia's chips, okay, but if they can't make it, right? But Micron depends their memory chips to be sold to NVIDIA to put onto NVIDIA's chips. Micron's not going to be able to put those chips onto NVIDIA's GPUs. So the whole supply chain, there's going to be a chain reaction and get impacted negatively if something happens. That's my point. Anyways, I'm not saying that the sky is falling, okay? In fact, I am quite bullish on artificial intelligence. I mean, what I mean is I'm quite optimistic. I think it's going to do tons of good. I think it has tons of growth in store for us, and we're still, as they would say, maybe in the second or third inning, but AI is going to do great for us. I'm not saying the sky is falling, but the risks are real. And what it always comes down to is you doing your research, what's going to be palatable for you in your investments. Okay. So at the end of the day, being smart, being competent is about knowing the different angles, different sides to the stories. And that's what I hope to share with you guys in all of my videos is just to be informative and give you guys a different angle, or at least bring up some of the information that maybe you might not have come across your table yet. Okay, so let me wrap this up with 3 simple takeaways. Okay, number 1, the rally is narrow. Know where your money is. If you own S&P 500 index funds, okay, through again your 401k, any type of investment account, okay, a huge percentage of your money is practically in a few of the main stocks, okay. Probably going to be more concentrated than you were told, but again, whatever works for you, right? That's what it comes down to. Number 2, hardware is beating software right now. All the money that's being spent by all these big companies, again, by companies like Amazon and Meta and stuff like that, right? It's all pouring into building the infrastructure, the AI data centers, the chips, the servers, etc., right? All that stuff is where the money is at right now. Number 3, don't chase the hype. Look at the numbers, okay? Dell's 757% AI server growth. I mean, that's a fact. I mean, they're making money, okay? So, on top of that, and I mentioned it a couple times, okay? It's not just that they're making money, right? But they're actually profiting, right? And that's a fact. So, there's a reason why Dell has exploded as of late and why their stock has been worth so much to these investors when they do their valuations. Okay, real profits, and that's why people are moving in on them. Okay, it's not just exciting stories. At the end of the day, I want you to know, right? Again, these things are my opinion. Okay, my opinion are my own, but I'd like to share it with you, see if you can take anything from it, use it as a different vantage point for your own financial knowledge. I'm not a financial advisor or anything like that. I'm not going to give financial advice, but I want you to know that knowledge is power. And of course, the more that you understand, at least that way you can make informed decisions, better decisions that will be suitable for you and your financial well-being. All right, so before I wrap it up, right, I just want to summarize this entire video that I had made here with these 3 lines right here, right? First, there's a problem with the stock market. That's the fact that it's concentrated more than most people think. And of course, it just depends on what's best for you and your portfolio, okay? I am a firm believer, similar to how Charlie Munger and Warren Buffett would say, right? I mean, if you're diversifying, that means that you're taking away from your best ideas as well. Okay, so sometimes, I mean, in my opinion, it is my opinion that sometimes being concentrated in things that you have firm conviction on is probably the best. But again, everybody's different, and you've got to do your own research and identify what's going to be best for you there. Okay. Then in the middle, right, I've got the fix, which is that AI hardware, right? That's where all the money is flowing into, real money. Okay, we're talking about 700 billion this year with a B, 700 billion, right? And then of course, following years, we're moving into the trillions now. So you got to keep that in mind, okay? Follow where the money's at and see how things are moving through the supply chain, who's making the money, how long they're making it for. That way you can make the best informed decision for your portfolio. And then lastly, I've got the proof of Dell stock, right? I mean, I explained how they went from, down low as a legacy company. I mean, I can't really say down low. I take that back. I mean, Dell's always been a great company, but I mean, they're even making way more money now. And then, of course, even in looking for the foreseeable next couple of years, I mean, they're going to be making tons more. I mean, it's not hype. It's happening right now, right in front of our eyes. I want you to know that and be informed of that. Okay. Thank you everybody for watching. If you had found this helpful by any means, right, please drop a like, leave a comment, and subscribe. If you think that this can benefit anybody that you're around, right, friends, family, your sisters, your brothers, whoever's interested in investing in stocks, right, share this with them, please. If you think that it can help them out, right, please share this with them. And I'd be completely grateful of that as well. So, anyways, comment, tell me what you think about Dell. Tell me what you think about the AI hardware story. Tell me if you're investing and what your thoughts are, okay? What you're worried about. And then of course, I want to know about the risks that you think of as well, right? Because I want to keep myself filled with POVs, point of views, right? And I want to hear from you. So I'll try my best to respond back in the comments as well. As I always appreciate, this two-way dialogue. Stay informed, follow the numbers, and just make the best, most pragmatic, competent decision for your own portfolio, okay? Thanks for watching so much. Stay smart out there. Again, it's Curtis signing off. Make it a great day.